I'm going to take a few time to explain what the chart is all about. Now, this is a chart. On the surface, what you see, all this is called a chart. Now, the chart is made up of buyers and sellers. The buyers and sellers are the ones who make up a chart. And all this information which you're seeing is what we call historical data, like previous behavior the market has been doing for the last 5 minutes. Now, in the chart contains a whole lot of informations. Informations of about the time frames, indicators, alerts, of course the instruments which you are buying and selling, and the drawing board. And then I could indicate that as I speak again. These are the drawing boards, these are the tool for the drawing boards, and these are the instruments you're buying, which is what you want. Is it crypto? Is it indices? Is it fund? Is it forex? Is it future trading, or is it bond? And then you have the second phase. You have the time frames, which are differs. I'm going to go through all these processes and see if I could break it down in a manner that you could assimilate. All right, so we're going to start first with the surface of a chart. Now, what is a chart? A chart is the historical data or the information of a previous instrument. Now, the future market or the forex market is made up of buyers and sellers, and the chart shows that information on how traders have been buying and selling for the last days, weeks, months, years, or even hours or minutes. And the way that happens is, all you see now, this is the present moment of the current assets that I'm looking at, which is Swiss 20 CFD. And all of these that you have seen in the chart are previous behaviors of what the market has been doing for the last 5 minutes, or the last, of course, these are the last 5 minutes. If you accumulate all together, the last 1 hour, the last 2 hours, or the last 5 hours, or even days or weeks, right? And the chart is made up of time frames, buying and selling, and of course drawing tools and indicators as well. So let's start from here. And like I said before, I explained this and how you can choose an asset from here: your Swiss, your German, in fact your future, your cryptos, whatever choices of crypto you like. Is it Bitcoin or Ethereum or whatever type of crypto that you like to trade as an asset? And the next phase we'll go to is the time frame. Now, what are time frame? Time frame can be defined as, the best way I can define time frame is, if you have a piece of apple, right, and then you put the apple on your plate and you got a knife, and then you slice the apple in 5 places. How many apples do you have? To answer this question, the time frame interval will answer it. On this situation, we have Swiss 20, which is an apple, for instance, and Swiss 20 can actually be divided in the forex market to different time frame. We have the 6 months time frame, which will show us the behavior of the market for the last 6 months, and each candlesticks, which I will explain later what are candlesticks. Candlesticks are actually this printer you see on the surface of the chart. These are called candlestick in forex market, and each candlestick is represented as 6 months. Like, this is the last 6 months, and this is the current 6 months. This is the last 6 months, and this is the last 6 months. Each candlestick represents 6 months on a time frame interval, and the last 3 months, this is the last 3 months. Each candlestick represents the last 3 months. And then if we go down to, we can go down to 1 day, 1 week, where each candlestick represents 1 day, 1 week on this time interval. Now, each candlestick represents 1 day. Now, the apples, that was going back to the metaphor of the apple that was one that was cut into 5, that was sliced in 5 places. Now we have a 1 Swiss Swiss current assets that is sliced in 6 months, 1 year, and 12 months, and 3 days, and 4 days, and 5 days in different time frame. But what we have on the whole column, the whole thing is an apple, or the whole thing is a Swiss 20 CFD, right? And I hope you get that though. So the next thing we need to switch on, that means you can, that's why we have different levels of traders. We have traders who trades 1 hour, 4 hours, 3 hours. They are all trading the same asset but in a different time frame. So mostly traders who trade the longer time frame, like day, weeks, and months, they tend to be investors. Why traders who trade the hourly time frame, terms like 4 hours, 2 hours, 3 hours, and 1 hour and 5 minutes, they tend to be traders. All right, and then when traders go down to 5 minutes, 2 minutes, 4 minutes, they tend to become scalpers or flippers. All right, these are the different category of trading. They are investors, they are investors, they are traders, they are scalpers, and of course they are flippers. Those who just flip the assets that doesn't really matter to the investor, who see the long-term perspective. All right, and the next thing on the chart is indicator. All right, this is actually no indicator. Actually, these are the things that you can change your bars and what it means. Your bars, maybe you don't like the candle thing, you just want to change it to something else. You can play with these though, it's very fun to do. You can play with this, you can choose the hollow, the wheel, the lines, and all of that. I don't really play with that so much. With all humility, I like to use the candlesticks. Now, explaining candles, yeah. What are candlesticks? Candlesticks are actually what present the current information of what an asset is doing at the moment. All right, and all that has been shown before from the candlesticks are previous behavior of what buyers and sellers were doing. On this case scenario, buyers were buying and then sellers came in that took over from here, and then they sold down here, and now buyers came in back to buy the market. Sellers didn't accept that. It's just like a video game or a football game where two players are trying to play each other. This is trying to win and the other is trying to win. So forex market of trading markets is made up of two persons, two individuals, someone who's trying to buy and the other person is trying to sell. The same everywhere. And candlesticks has different definition. Like I said before, this is a course on its own. Candlestick should be learned to be explained in different manner, how it opens and how it closes, and what each candlestick stands for, because they all represent something. Each candlestick represents a story. Now, moving forward to indicators. What are indicators? Indicators are informations that has based on algorithm. All right, they are based on algorithm. You have some of the indicators you have is moving averages. You have moving averages like the 20 period moving averages, or the 50 period moving average, or the RSI, the relative strength index, and of course you have the volume, which indicates what volume you are using. If you're what is the current volume of each market. They are all under indicators, and they are all based on algorithm on how market behavior or money coming in and out. And the third thing on the chart is this column, which I don't really use that much on TradingView, and alerts, of course. And if you see, it doesn't really contain a lot of things. There's nothing much complicated about this. If you pay attention very closely, you see it's not really complicated. It's just the charts, the candlesticks. Of course, the instrument you want to choose is a crypto fund, future, forex, and indexes, or the time frame you like to look at. Is it 5 minutes, which is for scalpers? Is it 1 hour, 2 hours, which is for traders, professional traders? And is it 1 day, 1 week, and 1 month, or so forth, which is for investors? All right. Though there are some traders who could trade a day and 1 week, but there are other traders who could also trade 1 month and 2 months, but mostly for investors who can put money in and get out in the next 3 months or the next 6 months. All right. And now scrolling down, we have this drawing board. The drawing board consists of different lines. Yeah, this is where traders come and play, to actually look in case the situation is not clear. You see, this is like a point to point where you can draw a point, a trend line, And this is another course on its own. What is a trend and how a trend works and all of that. So we can teach that later on in our technical analysis video. But first, let's play with all of this surface. So let's get familiar with it. We have this trend line. All right, trend line actually help you to identify trends that are not clear. Sometimes markets can just be consolidating or making different moves, make there's no clarity. The line actually give you an indication of where the market is heading. Is it south or is it north? So it gives you a clear vision of where the market is going. That's what this points to points or trend lines does. All right, on this case scenario. And then the next we have we have rail. We have you take your time, play with them. We have the horizontal line, which is for horizontal line. We have the vertical line as well, which is the vertical line, which is to separate a lot of things from a lot of things. It's just lines and kind of stuff you play with as a forex trader. It's fun to do though, really fun to do. And look, moving forward, we have the cipher. People like to play with this, the head and shoulder pattern, and then this is to indicate a lot of stuff. Yeah. As a trader, you got to play with this. It's really fun. All right. As a beginner, it's really fun to play with this stuff. So you have the head and shoulder lines, the ABC pattern, the triangle, the Elliott wave, which is a remarkable wave of spotting trends, and of course the triangle waves and all of that, the Elliott's W and dot. And then you have we have the Fibonacci. We have the Fibonacci to indicate trends. You have the Fibonacci to indicate trends and all of that. It's really fun to play with this stuff. They're really fun to play with. If you could check them up, there's nothing complicated about it. Just play with them and find the one that's actually that you can learn, one that you can learn and master, and see if you could use it to build up a very good edge or strategy that works for you. So meanwhile, now you know about a little bit about the chart, because there's not so much about the chart to know. It's just buying and selling, buyers and sellers, and of course the instruments that you choose from the TradingView, and then the time frame, which don't forget what time frame is. Time frame is just the time frame interval. If you can remember the apple metaphor on how it's sliced, but it's the same thing. It means the same thing, but in different way. And then the candlestick, which is there are different kind of candles and different kind of chart pattern that you can go with, which suits you. This suits me better. The candlestick suits me better, which I'm going to do a course on later on. And then the indicators. Don't forget indicators. Indicators are algorithm, like I said before. Algorithm that is based on some formulas, that gives a random outcomes on some formulas, like the RSI, which is the relative strength index, RXI, which is a relative strength index that gives a certain formula on how market operates. All right, you see, you have this is also another course on its own. And you have the volume, we have the average, moving average, and so many of them. There are thousands of them. You can go on and check and play with them. And so far and so good. Then tell me if this video is helpful, and if it's helpful, put a thumbs. If it doesn't, still put a thumbs. We're going to work on how we can improve. Thank you very much, and God bless you.